Welcome. Melissa from Smartistry joining us. My name is Kat Anderson. I'm helping to actually represent two sort of programs today. I am representing AIBI, which is the Apparel Industry Board here in Chicago, as well as one of our programs, the Artist Resource Mobilization. And both things are really looking to help serve artists and artisans, especially in fashion, as well as theater and other program industries, to get business support as well as training and things like that. Melissa, would you like to tell us a little bit more about Smartistry? I'm going to turn things over to you.
I would love to, and I'm so excited and grateful to be here. Thank you for making this space, and thank you everyone for joining us today. What a great way to carve out a little bit of time to make an impact on yourself, and certainly get some good, valuable information that you can then spread to your community. So just sustainable life through entrepreneurship, through work-life balance, and through all things sort of equity in life, really. My background is as a theater director, and my journey has kind of been unusual because I had one path as a working artist and another working kind of a more traditional corporate job. And in that position, I work for an organization that does a lot of training for financial advisors. And I have had the benefit of getting a lot of great information by proxy. And my personal mission is to really pay it forward, everything that I'm learning about personal finance, about insurance, and all of those amazing vehicles, and really connect them back to my community as an arts person. So Smartistry is really designed to help create and facilitate these kinds of conversations where we can confront the stigma of talking about money first and foremost, because I know that's a thing, and where we can start to exchange ideas with amazing practitioners and experts like today's special guests. So rather than talk more about Smartistry, I want to jump right in and introduce our very, very special guest, Thomas Cavanaugh. And I'm just going to read a short bio of Thomas, but then I'll let him do the heavy lifting and introduce himself. Thomas provides expert income tax consulting and preparation, working with clients in Michigan and Illinois, as well as virtually. Thomas received his BBA in accounting from Western Michigan University, Kalamazoo, and his master's in business administration from the University of Notre Dame. After decades, he re-met his now wife, fashion designer Lauren Lane, I hope I'm pronouncing that right, with whom he has created an amazing partnership in business, in art, and of course, in love. What an amazing bio that is. Thank you for being here, Thomas. Welcome.
I wish I could have that much to say. I really can't. I'm not used to that. I'm not averse to it either. So thanks for saying all those nice things. Wow. It's really great to be here too. And I think the skinny is that, of course, I've always been visually, found the world a very visually interesting place. And I picked up a camera when I was 8 and haven't put it down yet. But I was, I think I'd like to say I was aging gracefully in Kalamazoo, Michigan, with the kids that all moved away, found their own lives elsewhere for 10 years. And I'm just like, Chicago is only 2 hours away. And I was thinking about moving here anyway, at least part-time. And then I, like you said, re-met Lauren Line. The last time I saw her back home, she was on a swing set. So we would have not recognized each other walking down the street probably if we happened to meet. But then it's like it happens for a lot of folks. I met a girl and my whole life changed.
That's incredible. It's such a great story.
It was a change for the good. Anyway, one of the reasons I'm interested in being here is, of course, to contribute what I can, like I said yesterday with Melissa and Kat, that once you get the bills paid, you really need to do something that's valuable. And if I can contribute some information somewhere to someone that is a positive thing, I feel really good about that. There's a lot of intricacies in what the work that I do, or at least it's perceived that way, but it's actually just a very narrow subset of what human activity is. And if we don't recognize that the value that art and artists have in practicing this sort of subset thing, then we're just fools, right? So another reason I'm here is because I always want to hear some dead end that somebody came into that I had never heard of before. That's always interesting because it all fits whatever we encounter in our financial lives, all fits within a real narrow paradigm. And I'm always happy to run off in some direction or another that I haven't been in before, some little nook and cranny that I haven't been in before. One little comment about the MBA at Notre Dame. There's a master's in business administration, but the concentration is in federal income taxation. So there's 45 credits, and more than half of that was federal income taxation. In the very first class I sat and read through and understood an IRS regulation they got me to that point of my reading skills. I could read the regulation and understand it. I thought, I can still go back, but I didn't. It's intriguing stuff. So that's all I got to say. Really, I'm just really glad to hear what is on everybody else's mind.
I love it. I love hearing that. And yesterday when we met, you shared some really great insights about how you got started in your career, and it's so relatable. Why don't you tell the audience what you shared with me and Kat last night?
Yeah. Thanks, Melissa. My short little path was growing up in a small Michigan town, like we said, there was an empty lot between Lauren and I, but my dad built houses there, and he was what he envisioned as a so-called entrepreneur, where if something came into his head, it was genius, and we would act on his genius and then say, so I'd get to critique his work basically. And when I was 20 years old, I took over his retail business. He had a retail business because he could borrow money basically. And by the time I was 25, I said, I really got to go to college. I'm not getting what I need from reading Business Week or Wall Street. So the first accounting class I took at Western, it was like a eye-opener revelation. For some moment where you say, wow, this is really interesting, because that piece of paper you're studying, whether it be an income statement, balance sheet, or tax return, is a representation of what was going on in the real part of the business, and vice versa. The real part of the business reflects the paper. And I was thinking, man, I can understand what's going on by looking at this paper. It's kind of a roadmap. But further thought on that is that what goes on in the tax return and the financial statements really monitors something else that's excruciatingly intangible. Now it's an intangible document, but the thing it monitors that's really excruciatingly intangible is money, right? Because we don't see any money flows. It's not a pile of paper anymore, and it's that's what makes that sort of part of your life. If you can sort of understand what's going on there, at least, then you have a better chance of making the physical part of the, whatever it is you're quote unquote doing, have some semblance of order, and some ways of, you can modify it and direct it basically better if you understand what's going on with all that. You don't have to be a tax expert, and I'd really hate to see anybody that's involved in the arts professionally tackle that too far, because it's kind of a waste. It's really actually pretty simple, and it's pretty straightforward, and it's pretty linear. But the tax work especially seems disjointed because it all relates to common law, basically. So there's a tax law that undergirds the tax returns and all those ideas on the tax returns. That's why it seems to be jumping around, but it's still, like I said, it's in the same framework. So that's all I got on that, Melissa.
So we'll probably talk about some of those changes that are coming. Every administration brings tax changes, and there's probably opportunity for us to speculate a little bit on what to expect there. Before we get into nuts and bolts, though, um, Thomas, what do you love most about your job? We talked a little bit about that yesterday.
Well, I guess it gets down to the difference between self-employed and employed, where with employment, it can be, not always, but it can be just doing a part of it for someone, and the lack of, there can be you can feel unfulfilled, I guess. I haven't really been employed, I gotta admit. I've had like maybe 3 years out of the last 50 that I've actually got a W-2. So I can't really speak to that too much, but that's my understanding of what it's like to be an employee. And there's a lack of fulfillment where if you're self-employed, especially if you're producing something either tangible or not, there's a pattern, there's a cycle, there's a part of beginning to end. There's a piece of fulfillment where you're working on a project, and the only thing that matters is getting that project done. It doesn't matter what day it is, what time it is, whether or not you ate, and so forth. It's not always like grad school, but it's compelling in that reason. And then the satisfaction you derive by the joke I make in the office is occasionally when people are appreciating what I'm doing is that I get to help people in an unusual way. I never ever put on latex gloves, so that's what I like about it. I think the most is feeling like I've done something that's worthwhile, and be recognized for that. And then they pay you for it. And then the check clears. Back in the day when people wrote checks, and it was like, wow, this is very satisfying. Part of being an employee is the relationship between the employer and employee, where generally speaking, employees are at will. They can be on pins and needles about whether they're employed. And in a way, it's a drawback to being self-employed, where you don't just in real shorthand, you don't just go to work and 2 weeks later money turns up in your account. You have to actually produce whatever the goods and services are, market them, deliver them, and then collect for them. And all that part of self-employment is a burden, and that's why a lot of people don't do it. And it's perfectly valid. The flip side of that employer-employee relationship is that when you're self-employed, people say, you're your own boss, and actually you're not. Every one of your clients is your boss. You might have 300 bosses, right? But the really major distinction is if you don't like one of your bosses, you can ask them to leave. and I'll fill up that spot with somebody who I get along with better, who appreciates, who doesn't get in the way, that sort of thing. So that's my view on what it's like, and why I do it, and why I would enjoy doing it for quite a while.
I love it. You mentioned also it's so fun when your clients are getting a nice big refund.
Yeah. That's especially when it's unexpected. Eventually, if someone has a pretty routine situation, they say, "Of course, I'm getting $6,000. I got $6,000 last year," and so on. But then every once in a while, it's invariable that
Okay.
in the last 30 years, at least one person gets 10K that they didn't get. And I would maybe sometimes 20K that they didn't expect. And so eventually I tell that story to a few of my clients, and they say, "Can that be me this year?" And I have to explain to them, it's completely random. I have no idea, but I'll do my best.
It's good. It's good to win by proxy.
Yeah.
Awesome. Well, we're so excited to meet you. And I know that our group here today is probably chomping at the bit to ask you questions. So in a moment, we will start to take your questions. I know that you can go ahead and type in a question in the chat if you want. And I know Kat's probably going to let us open up some cameras and mics for those that have questions. We'll get to that in just a moment. But before we dive in, I wanted to talk a little bit with Thomas about the mindset of an entrepreneur, the mindset of an artist, and what a challenge it can be for an artist to think of themselves as a business entity, or, you know, a self-employed person, their own boss. And that's kind of the remit of the Reluctant Entrepreneurs Club, is, you know, being your own boss. So in your experience, Thomas, what are some of the challenges and opportunities for folks like us who are starting out in business, or, you know, looking to take their business to the next level?
That's start out with that opportunity thing. That's a good point to bring up, because in my observation, nothing, if nothing changes, then if everything stays the same, then the people that have always made the money will always make the money, right? So that's, we hate to think about the current pandemic situation as being an opportunity, and it certainly has been a horrifying situation, and we certainly don't want to feel like we're somehow benefiting from the loss of others' experience. That's a horror. We just, it's been a year ago, just thinking about how deep was this hole going to be and so forth was really unnerving. But there are positive parts of that. This medium we're here in right now, of course, people weren't interested in and so forth. We can meet people that we may never actually be in the same room with, and help them somehow, provide services, whatever, in ways that we couldn't do before. So there's that. But there's really, for me, the interesting part is, where are we all going to land? What's going to be interesting enough for people to purchase when we get back to some normal, which won't be ever again, if we're, unless we're fools to be the same, you know, so-called normal. Obviously, our systems are not, and our whole lives are not set up to deal with something as benign, at least on its own, as a virus. So that's what's really interesting to me. The really the hardest part, I think, about self-employment is, and I was having this talk with somebody the other day, I think it was on text, and I answered my own question. I said, how many ways can things go wrong at the worst possible moment in the worst possible way? And then the other person didn't respond, and I said in all caps, all of them. All the ways it can possibly go wrong. It will. So Murphy's Law is still on the books. It's really hard to set yourself up when if you're coming from a background of not figuring this out. It can be really unnerving and debilitating and discouraging if the bets you make don't pan out. And meanwhile, there's some really horrendous consequences of it not panning out. You know, the rent, the bill, the phone bill, utility, blah, blah, blah. That's the really hardest part. And if you can master that, then you are going to feel like a champ, right? You're going to feel like, wow, I can take just about anything that happens. And so that was, you know, that's my background since I was 18, 20 years old. And but we still hit last March, and I'm like, wow, how do we think about this, right? These are so many unknowns. And then it didn't take very long before, and I didn't. Well, I guess I used that word pivot with Lauren. What are you going to pivot to? Because her business, for example, was primarily one-on-one or in big groups. And I started using that word before I started seeing it in the press. So I kind of felt a little bit good about that use of that word. But then I thought, no, I'm just like every other chump out there saying pivot. But
it's the right word.
I guess so. It's the right word. But once we get past that word, we say, yeah, what can we do? And the most interesting thing, I think, right now is we're starting to see some glimmer of hope on the horizon. What are people going to need? What are they going to want? What's the blend going to be between bricks and mortar and internet and so on? It's all fascinating to me, because there's an opportunity in there somewhere for someone to do something and feel fulfilled. Basically, that's kind of what I like to participate in if I can. Yeah.
I love that. There's, you know, one thought that has occurred to me in this time, and as we look towards the future and thinking about what things could look like, there's no one way. There's no one career trajectory that is the right one.
Yeah.
There is not only one measure of success. And for a lot of us, this has been a period of grief and mourning for the future that we thought we had planned out.
Yeah.
And trying to move into acceptance of what's possible, what's needed, where is the need, where's the audience. There's going to be a need for art forever. There always has been, there always will be. So trying to think about how we might master, as you said, the future of our own careers, is really what it's all about, and what I think a program like this is all about, by the way. One thing that I think is really special that artists ought to embrace, and I say this as we head into our Q&A period, is that we have an inherent skill that many business people don't have, by nature, and that is the ability to collaborate. That is the ability to know that we contribute our area of specialty and our gifts to a project, be that our artistic venture or our business, and we have space and the ability to process what others can bring to that landscape, like you, Thomas. So I hope that everybody has brought some questions and ideas to share on the call today, because really what the opportunity here is for you to collaborate with Thomas and to think about how you might add a subject expert like Thomas, or any other area expert, to your collaborative environment of the career and the art that you make. So I will get off my soapbox.
All good, all good.
And Thomas, I know you're ready for questions. I'm going to tee one up for you, but I would ask that everyone else get ready with your questions. This is your time. We did have one question that came in on Instagram, which is, what can artists do now in 2021 to prepare for taxes? What can we be doing as the year is starting to prepare us for the next year?
The real interesting thing has always been, people are always so proud of minimizing their income legitimately, or they can go ahead and just plain lie to me if they feel the need, but because they're signing the tax return, not me. But this year we say, oh man, if my income had been higher, then I would have had greater support during the pandemic, either through unemployment benefits or through triple P loans or EIDL loans, and that's something to think about. I think in terms of not about, of course, creating a false narrative for the tax man, but think about how it is you're representing yourself on paper. There's legitimate changes that have it go either way, right? Whether you wind up with zero income or a loss, or if you have an income, it can be all legitimate. But the other thing I hope that we've gotten freshened up on, besides learning how to wash our hands well and to keep our fingers out of our eyes and noses, is that the records we've got don't have to be much, but we got to have some records, right? There's every once in a while the unemployment people or the SBA or somebody else is going to ask, well, let's see that you had some evidence of being in business. So what people are prone to do, because once you hit that computer, once you hit that spreadsheet, you just can't stop yourself, right? Is overcomplicate things. And no, if you're just doing some electronic banking, you've got a solid backbone of record keeping right there. That would be sufficient evidence for, just about anybody that asks for it. So that just begs the question, where are you banking? And take a look at how good they are at record keeping. So some commercial banks don't provide stuff very far back. 6 months ago, if it's more than 6 months, you can't get a copy of a check unless it's $25 a piece, which means you're not going to get a copy of the check, right? And then other banks say we can pull this stuff for 3 years. So that's a kind of a critical thing that you probably hadn't thought of before. So there's that little bit of housekeeping that that this sort of woke us up to, I think, because who expected A, the pandemic, and B, expected that those sort of government subsidies would turn up? Nobody, especially for self-employed people. We've never drawn unemployment, right? Because you have to contribute something to the unemployment system or draw something out, which means you got to do some fancy footwork to make that happen if you're self-employed. And all of a sudden the federal government says, don't worry about it. So that was rather stunning. Basically, I think not to be overdone at all, but the most outstanding way of for my mind, is to prepare for an uncertain future, besides have some cash on hand, would be to have some adequate records in case we need them. That's it.
Mm. Rainy day fund.
Yeah, a little bit of that. Wouldn't hurt.
Yeah, absolutely. So you're saying keep good records, keep your receipts and your your history, and don't forget to have some cash handy. I think that's always good advice. Even if
the records, you don't have to even if the records are just your bank statements, and that's happening anyway every time you swipe your debit card. So every time you write a check, if you write checks anymore, it's all right there. That's the most awesome thing ever. And you save copies off of that in case you can't get to the bank, whatever, you change banks, whatever, you've got the copies saved off. So it's a minor thing. The easier you make it, the more likely it will be to happen.
Fabulous.
Yeah.
Well, I would love to open things up, and Kat, I know you're moderating. Let's do it. I'm ready to learn. I don't know if you noticed, Thomas, I'm taking notes. I got my pen. I'm like,
So we're definitely inviting everybody at this point to, if you feel comfortable, please feel free to turn your cameras back on. You don't have to. I mean, there are definitely times where I'm out in my kitchen and I'm working on dinner and I don't want anybody seeing me eat. So we feel you. But I actually have a really good question. I think we had a corollary or another question that was showing up on Instagram asking about, when do I have to switch to quarterly taxes?
Yeah.
And along with, I think we can almost go on along with that, because I know you were talking a little bit before about how the difference between people like having this feeling of, oh, well, I want to kind of do things under the table. I don't want to have to report too much. I don't want to have to, file too much stuff or declare too much, income. So I have to then pay more taxes in. But obviously, when you do have to say, file something like, or if you have to show, you're applying for a house loan or something, you have to be able to document income. But if you're not making that much, like, what is that break-off point? Totally to make a long question short. Yeah. What amounts, should you be looking at that you actually really, really have to start focusing on that? And when do you have to go to quarterly taxes?
Yeah, it's a good sign if you have to pay quarterlies, because that means you're profitable. The IRS rule is if you owe more than $1,000 2 years running. So when you're all done calculating your gain and loss, the second year, if you made $1,000, if you wrote a check for $1,000 or more to the IRS, and do that the following year, then the IRS eventually will send you a bill saying you should have paid. Here's what you should have paid and when, and they'll calculate a penalty and interest. Not significant interest amount, of course, these days. The penalties can be significant. It's kind of a waste of money. It's hard to think about that because especially if you ever had experiences being an employee, that stuff all automatically happens. It's whenever you get a paycheck, it's net of all that stuff. And the first year, frequently people are quite insulted by the whole idea. It's cheap insurance, basically, once you cross that threshold to pay the quarterlies in. Self-employed people are going to wind up feeling like they're paying more taxes, especially quarterlies, because they're actually contributing as much, both halves of the Social Security tax that normally they don't see. As an employee, you contribute roughly 8%. As an employee, an employer contributes roughly 8%. When you're self-employed, then you're contributing the whole shot. After you do some magic, it winds up around 13%. So the cynical comment I've heard for over 30 years, well, Social Security is going to be there when I need it. And I'm thinking, I heard that in 1990, and guess what? It's still here. So we probably should plan on it and contribute to it. But the part that gets overlooked is Social Security. I know I'm branching quite a ways away from your question, but that is a good part of the tax that we pay. as self-employed on a net income as Social Security tax. The thing to keep in mind about that is there's spousal benefits built into that. So if you're married and have the unfortunate pass before your spouse does, they can possibly draw a Social Security benefit from that. And if you don't pass away, but you become disabled, there's a disability insurance component to that too. So it's a retirement savings and a disability part that is significant. Sometimes makes all the difference in somebody's life. So here's the great thing about taxes is I always wind up talking about politics, not in the overall sense, but just who is running my life in DC. And because I had enough people complain about the Social Security tax as being, not worthwhile, gave me a chance to think about it. And that's really the aspect that we all overlook, is that there's actually a current benefit should we become disabled. So there's that, more than you asked for. Sorry, Kat.
No, that sounds great. Actually, that really kind of clears up a lot of stuff. We do have a good question here. Kate is asking, I became an LLC in January of 2021. I've been a sole proprietor since 2001. What will be different in my 2021 taxes next year?
Well, you take on the LLC status to attempt to keep people out of your personal assets, right? That's the idea of an LLC or a corporation, is you're trying to create a separate entity between you and adverse parties out there. And just about any business you're in, if you are in business long enough, you'll meet them. If it's a sole proprietor LLC, and you're doing, if it's a sole proprietor LLC, your tax return is going to look the same. You're still going to file a Schedule C, but the really key part there is that at the top of that Schedule C, they'll ask for a business entity name. You'll use the LLC name and you use the federal ID number you got, hopefully, to match with that LLC. So that's the first part of it. I want to branch from that just for a second. The filing of the paperwork, maybe who asked that question? I'm sorry, I want to address that.
Her name is Kate.
Kate.
Hi, Kate.
Hi, Kate. The part that seems dubious, let's put it that way, about filing an LLC, if you didn't do it through a lawyer, if you just registered with the state, is that you haven't really perfected the organization that'll help you keep people from taking your personal assets. So there's a book that goes with that, just as if you were filed a corporation. The attorney updates it every year, as well as updating, of course, the name. But there's a book of writing and discussion in that book about what the corporation / LLC is for. And just that paperwork itself helps keep your argument going in the right direction in the event that you're getting in front of a judge on something. And so that's the other part. Besides filing a Schedule C with the business name on it and the federal ID number that the IRS gave you with that DBA. The other part of it is that book of record, and that gets updated every year with a report of an annual meeting. Whether or not one happens doesn't matter. The running rate for that's most places like $600, $1,200, and it's just insurance, really. And none of us feel like we're engaging in very dangerous activities subject to that kind of lawsuit, and but then on the other hand, people sue everybody for everything, no matter what. They can do whatever they want. So it's a good thing if you've got any kind of business activity. If you've got any kind of assets to protect, that's a really good thing to do, is form that LLC. Yeah, I'm not a lawyer. I just work with a lot of them.
That sounds like a really good idea for a topic for another month for your lawyer connection, Melissa. But it sounds like overall, then, from a tax perspective, the only thing that really changes, as you said, is what the doing business as name is, and possibly a slightly different, like you said, a Schedule C form. So it's a slightly different form, or
it's the same form you file as if you're self-employed. A single member LLC is treated as by the IRS as what they call a disregarded entity, and don't feel bad, don't take that personally. They're just saying that, no, you're just a person that's filing a slightly different form. If there's more than one member of the LLC, then the LLC has to run off and do its own tax return. And the results from the tax return then wind up on that person's personal tax return. But no, the self-employed people will be filing a Schedule C regardless. But once they get to the LLC status, they just change. It's really important to change the name on the LLC. You've got your instead of your social number turning up on that particular part of the return, it's got the federal ID number for the LLC.
Okay, that's really good to know. So it's pretty much the same, but it's the legal stuff that you really gotta keep an eye on, not necessarily the tax.
Yep. That makes the whole thing complete.
That makes sense. Thank you. I think we've caught up on questions in the chat. Does anybody else have one or want to jump on and ask personally your question?
While we wait for folks to type them in, I have a question. Many of us are looking for ways to grow the business, and that requires some investment. What kinds of things can artists write off on their taxes? And what would be good for us to know in terms of carefully constructing our personal budget versus our professional budget?
Well, ideally, you've got a separate checking account. That's a nuisance. If you have an LLC, it's really important that the LLC has its own business account and those funds don't intermingle. That's one more piece of keeping those things separate. Back to the deduction question, the general idea is that any expenditure you make in order to attain a profit is a deductible item. You can see how people can stretch that really quickly, and IRS likes to really quickly draw the line on obviously personal things. Blue jeans, for example, they say, yeah, right, it's hardly ever possible for you to write off any clothes. Maybe in a stage production, that was the turning point there is if it's cannot be worn in ordinary wear is the key phrase on clothing, for example, that and the example they used to use anyway in the tax literature was an airline pilot's uniform. If the airline pilot had to buy it or clean it, it was obviously it's clothing, but it can't be. You're not supposed to be wearing that when you go into the grocery store. So there's that sort of thing, but also if the artist is using space, part of their home for production of goods or meeting with clients or doing handling the business end of their activity, then they can start thinking about using some of the overall cost, of the space you're in, utilities, mortgage interest, if any, or rent, including cable. That's all allocated out by the square foot. So if you have a 300-foot part of your house you're dedicated to using for your business, and the house is 1,200 square feet, you do the fraction on that and you apply that to those expenses. A very special magic secret form 8829. You'll love that when you get into it because it's a 2-column report, immediately confusing. But if you get the results you want, you're probably okay. If you find out if it looks like you're taking way too much expense, that's because you're in the wrong column. That's a major expense. But then the other things that you might run into is advertising or marketing by going to events or whatever. So if you have an out-of-town event you're going to, then you're going to be talking about the lodging, the travel expense to get there, and so forth. Those things are appropriate to reduce your income by. What else? What other kind of things would you get into, really? I guess it depends on the kind of activity you're in, right?
Probably materials, I would think, if you're making something to sell.
Yeah, tangible, yeah.
Now, how has that changed? Because you've been hearing rumors that that's changed of what can be written off for small businesses and like home offices in the last year. Is there anything that's suddenly showing up now that you can or can't write off?
Well, that's the interesting thing in my line of work, because I'm always trying to parse where that came from.
It's
When
a
I get
myth.
to, it's a game of telephone, you know. I have a feeling, I'm not sure, but because I haven't seen anything that directly relates to anybody that's self-employed like that. I have a feeling where that came from was there was employees could, to an extent, do the same kind of thing up to 2017. So beginning in calendar year 2018, all of a sudden, and if you're doing the taxes yourself, you may be winding up in this part of this, the itemized deduction form where it says employees can deduct all this stuff, right? And it's really great. And it used to be really great. And it got killed off in the 2017 Act. So I wonder if that's what is being referred to when you read about that, because other than that, I don't know of anything that affects the Schedule C, the self-employed person directly, but maybe somebody else has some better information on that. That is, except that now so the itemizing part is for employees. So there's a couple things going on there. They are moving playing the shell game. So they increased the standard deduction, took away the personal exemptions. And part of that standard deduction is referenced to a part of the form called itemizing. That's where employees would take off part of their taxes, right? It was basically something to put salve on the wound for taking away a significant deduction. But if you're self-employed, that stuff all goes over in your Schedule C. If you're an employee and you've got a bunch of unreimbursed expenses, yes, then those things would go on to the itemized form, the Schedule A, and it would be sub below that, the 2106 form where you tally all these employee expenses. But if you're not an employee, and we should talk about that, the difference for that, I imagine everybody's got a handle on that just by virtue of what kind of document comes their way. If they got a W-2, then it's no question that they're an employee. If you got a W-2 that's coming your way, and for some reason you got a bunch of unreimbursed expenses in the past, you were all doing very well, itemized, take them off on the Schedule A, and that's the part got killed off. Yes, but if you're a self-employed person, if you're getting 1099s and no W-2s, then all that stuff still is deductible the way it used to be over on Schedule C. Yeah. Got a mixed bag, and then you get the fun part of deciding which part of the expenses belong in as a self-employed person and which part belong as an employee. And along with that, I always when I say that to clients, and I can see their wheels turning. And so one thing that's been consistent is whenever I ask somebody a question that they don't have a ready answer for, they always look in the corner where the walls in the corner come together. For some reason, they always look in that same place. And so I've started calling that the answer corner. It's like better than the 8 ball that used to sit on people's desks. So when I start talking about, well, you know, it depends on how you want to characterize this stuff on as an employee or a self-employed, and that's where they'd start looking at the answer corner. That's when I knew they were going to be making stuff up. But I'm okay with that. You know, it's their tax return, it's their life. But you know, you'd want to do the skinny is. Pardon my English, but I just don't ever want to give assholes anything to work with. The IRS is most likely never going to look at your work, and most likely, and when I say never, I mean so small, it's out in the third decimal point that it's going to happen. But if they just decide to look at that stuff, wouldn't it be nice to say, yeah, it's all here, and they're like, oh shoot, I guess we got to go somewhere else. That's kind of in the back of my mind whenever I'm helping somebody go through this stuff. And so if Kristen, if you're trying to decide which side of the whether those belong as self-employed or as employee, then it's kind of up to you, and it's kind of up to your probability estimation of what's going to happen with the IRS. Definitely Schedule C, because when you walk through that Schedule A, you'll get to the bottom of it. There's that place you can take all that stuff off. If you're jumping on some tax program, you're all punching stuff in, and then it'll come up with 0, right? Because that part's actually been cut off. The reason they left it on the tax return, I'm hoping, because someday they'll say, well, let's open that back up again. But there's like a minority of people, I think armed services maybe, that can use that section of the tax return anymore. The Schedule A, clear to the bottom, those unreimbursed employee expenses. So if you can move stuff over on Schedule C, you'd be better off if your aim is to reduce your taxable income. Yeah.
Great, thank you.
Sounds like, again, another good point for making sure you've got good records.
Yeah. Because, if you have to establish that, then it's in the event that the IRS ever asks for it. More likely, it's going to be the state. The states are getting really super aggressive. Illinois is unbelievable. I've encountered them a few times on stuff that our software does things a certain way, and Illinois says that's great for everybody else, but we're not going to do it that way. And of course, you start looking at the math. Well, that's benefiting. I'm sorry about your shortfall. But the state of Michigan seems to have caught up on that too. They're sort of juggling things around that makes it more lucrative for the state. So, and the states have been auditing stuff more aggressively than the IRS ever could. I think I don't know if you even care. This is not party conversation either. If you start talking like this at a party, they're going to not invite you next time. Trust me. Anyway, the reason the IRS is not as aggressive with their audits anymore is because Congress has just been debilitating them over the last 10 years and reducing their budgets basically. So then and even though the standard studies show that if the IRS put $100 into audit, typically they get $400 back. It's a great moneymaker, and you can also, the Congress can raise revenues without ever talking about raising taxes, but for some reason they're holding off on that. So for the time being, we don't. And the other thing that's really interesting, and eventually, is that there's this like muscle memory of how horrible the IRS was, and those stories are like 3 generations back. But I still have people sitting in my desk, 25 years old, terribly afraid of IRS just because they've heard those kind of stories. And the IRS is outnumbered. So what are you going to do when you're an outnumbered army? I mean, there's 100,000 of them, and there's 150 million taxpayers. Well, you just intimidate, right? And you make a really ugly thing. And I've had agents in my office that basically slam the rubber hose down on the table, like we're gonna that guy's gonna be really sorry, blah blah blah. And then I give him a little more coffee, and he tells me how to get out of it. So it's interesting, but those office audits, those random audits are pretty much out the window. But it's really good to be prepared for the state, especially the state of Illinois. I was surprised.
It's a good thing to remember that there's actually the two there, right?
Yeah.
Federal and the states.
This might seem odd, but the best thing to do before you lay hands on the keyboard is have an idea how it's going to turn out, right? Because then you can tell how far off in the weeds you've gotten, and it's easy to do that. I don't. I've helped folks with TurboTax and run TurboTax for them. It's adequate. And they're not doing too bad of a job. It's always good if you before you hit the file button to run that by somebody else who's got a little bit of experience in it. Just to see if it makes sense, especially if the outcomes aren't what you expect. If you follow the Q&A, you'll do probably all right if your situation is pretty simple. And other than that, I don't have much experience with other platforms. But if you had if it turns out that you just use the same bank account for everything for the past year or for this current year, that's the ideal thing. Okay. So you can I don't know how much you want to spend time on spreadsheets, but you can generally dump that stuff out into a spreadsheet format and just sort what you need to sort. You can sort all the revenue on one side and the expenses and start picking them out. Especially if you can sort it by name, then you have an idea. So I would start with the electronic side first, rather than looking at the paper. And the paper is valuable maybe someday by the time you get to it. If you ever talk to IRS or the state, it's going to be 3 or 4 or 5 years down the road, and all those waxy receipts are going to be faded anyway. So the ideal thing is, if you can muster it, is to at least print out the bank statements and organize them in a folder with your tax return once you get it printed out, and put that someplace where you're not going to lose track of it, because you won't, like I said, you won't be, talking about it with anybody unless we have a terrible situation again this year, for 3 years at most, and the state has a little bit longer to look at it. State has 4 years. But if you're walking through the bank records, then you kind of have an idea what happened. That's one of the reasons people sometimes avoid getting involved in this, is because they know it's a rehash of what happened, and sometimes they're always expecting the worst, and they're like, oh man, I really don't want to go through all this. Depending on the bank you're in, you might be able to they may have some sorting ability right inside the bank account. So what you're really after is sorting out, just separating out the deposits from the outgo, right? And once you just sort it in that very basic way, maybe you can print it out right from the bank statement. You can start handwriting, right? So if some things were coming in were not revenue, or if some things that were going out were personal expenses, you just mark that sheet up. Then you're golden in the event that somebody has to take a look at it, but it also gets your mind working about what really happened, right? And sometimes you'll say, oh yeah, I forgot about this, I forgot about that. This is off the bank statement. It'll generate a path. From there, from that document, that's a good enough document. It shows that you're, organizing things. It's a good enough document to jump from there into the tax return.
Thomas, actually, I wanted to come off of that. We've got a great suggestion in the chat. Kristen mentioned that she uses and.co to organize her expenses, which allows her to attach a project to every expense synced to her credit card. You can also take a photo of the associated receipts.
That sounds good.
And I think you would actually also mention, Thomas, as maybe like the next level, like when you're ready to take things to the next level, making sure that you have a separate account that's for your business versus your private, so you don't have to separate out, the things. I actually know I've used, depending on who you bank with, a lot of times for free, you can open a second checking account under the same account number,
right.
And get a debit card for that. I've actually done that, and it works really well because then you don't have to remember, oh wait, was this purchase at Walgreens for me, or is that for work?
Yep.
So that's and you can usually see it in the same login, which helps a lot, and transfer money real easy if you need to.
Right. Any and don't hesitate to think about filing as a self-employed person, whether you're an LLC or not. Like I said, if you're making an expenditure in an attempt to earn revenue, even if you don't earn revenue from that expenditure, that's an item that belongs on your business tax return. Yeah. What they're really reflecting on is actually the rules that apply to employees, and I've looked for that to see if it's anything different for self-employed, and I haven't. Where the idea is, generally speaking, is if you are an employee, you leave your house in the morning and go to a job A, and after job A is over, you go to job B. Now all of a sudden the mileage is different, or deductible between those 2 points, and they've sort of morphed that into the rules for self-employed, unfortunately. That one you really need to keep up with just on your with your accountant, because that does. Congress writes the laws usually deliberately vague, and they say, by the way, we'll let the IRS interpret it. So then the taxpayers come back and say, well, the IRS interpreting it wrong. So then it gets argued about. That's what I liked about tax to start with, is basically when I hit my first tax class on my undergrad, I was like, here's where the people are having an argument with their government. This is cool. I can remember this stuff. So that's why there's a back and forth, and I can't really make any clear statement on that particular item, that mileage, the difference in mileage. And I think that, well, I guess it depends on how by the books your accountant is. A lot of times accountants can get fearful for their own, especially if they're CPAs and they've got a lot invested in the title or the license. They get a little bit apprehensive about what's going on the other side of the desk there, when actually they're not the one signing the perjury statement at the bottom of the tax return. But sometimes we can get a little bit overboard on that. And I have a feeling that if your accountant is interested in getting things done, they'll kind of take your word for what your designations are, especially if they don't seem unreasonable. Well, do they once they hit a certain number, they're supposed to issue a 1099-K. Idea to really, if you have some idea, that's knowing the answer before you even open the envelope is not a bad idea.
Okay.
Look at that Schedule C. The top line is revenue, and then there's this adjustment line, right? That you can make a reasonable adjustment on if you feel that they're over-reporting the income. Then you don't have any argument with anybody. You just adjust it on your own tax return. So not a big deal. If your documentation is sound behind that, then you're good. Yeah. Well, that's not the way I would handle it if I was processing 1099s.
Okay.
They just wanted to line up with their checkbook, basically. They want to line up with their statements. But you've got plenty of leeway in that. I know it's a shock at first because it kind of looks like you're painted in the corner. They're reporting this to the IRS. And yes, your tax return needs to hold at least as much as is showing up on those 1099s on the top line of your Schedule C, whichever one it is you get. That's really what a tax return does. It's just a history document. But good for you. Kudos for tackling all those instead of just combining it, because it's really, every once in a while, it's essential that you've split that all out. But again,
You suggest,
there's always plan B.
and I'm
And
like, but
that's the workaround. That's the workaround. Take a look at that Schedule C. You'll see a line right below the revenue line. It's a place for adjustments. They don't ask for an explanation or anything. Of course, you'd want your explanation in the can in the event they came asking.
Question off of that in the chat. So somebody's wondering, can they deduct Square and PayPal fees?
The amount that they declare is net of that stuff. It should be anyway, right? So if you for example, if they owed you $100 and they give you $90, the 1099 should say $90, right? But if it says 100, you're going to adjust it to 90. But if they report that they paid you $90 after they took their 10, and then you go ahead and take the fee again, then this is the biggest offense there is in tax world, is you double dip. So that's just something to be aware of and not just stumble into accidentally, that you are looking at those statements and just automatic, and it makes sense. It's a logical thing because it is an expense to you, but if they've already deducted it, then you really can't deduct it again.
Sounds like that's a good place for making sure your records are reflecting, or at least communicating what's going on, seeing if it's a total amount and what you're getting paid and what's being reported. And the difference between gross and net, which is always catches me.
Well, the wording to start with, right?
We've got a new administration. You talk about like how, things can change every year depending on what gets argued or changed in tax law. What do you think is coming ahead for small businesses, in 2021? Do you think that, there's going to be anything happening more favorable? Are there rumors that, maybe there's going to be some loans or something available, especially with all of this, protection and extra stuff for the quarantine and the pandemic? What do you think?
It's kind of interesting how when something changes, it sort of gets set in stone. And the Ken Milani was my professor at Notre Dame, taught partnerships, was the hardest class in the world because it's totally upside down from anything else. But one of his comments about Notre Dame was, we do things once and now it's a ritual. Now we got to do it every year, right? So there's some weird things that happened this year that may continue, the weirdest of weird things. Well, I think I told you, Kat and Melissa, yesterday, the weirdest of weird things was there's a look back on earned income credit. That's a great conversation killer, except sometimes it meets $2,000 or $3,000 difference when people are filing a tax return. So if they're eligible for an earned income credit, and that doesn't mean just for people that have children, but there are people that have had a tough year that are over 25, get some of that money too. But the oddest thing ever, it sort of made me sit and think about who had their hand on the controls on this one, was that if your income last year was in 2019 was lower than it is this year, then they're acting as if that's your current income, which would generate a higher income tax credit. Your EITC is a bell-shaped distribution. So if you make nothing, you get nothing. If you make more than 40,000, you get nothing, but 15, 20,000 is the sweet spot. Depending on how many kids you have or how little income you made, you're gonna see some of that on your tax return. And that's not something that you'd have to ask for. I think if you're doing it yourself on TurboTax, you'd have to be really aware that that's a possibility. That's, like I said, that's the starting point, is when you sit down before you touch the keyboard, you're going to have an idea what the answer is going to look like, to make sure that those wires actually got tripped, those boxes actually got checked. The other weird thing, of course, this year that got some outright lies on networks I won't talk about or name, was the interaction of the so-called stimulus payments with your tax return. Everybody says, why why do I have to hear about this? I heard it wasn't taxable. Why are we talking about this now? And it's been misreported that that was actually taxable income. And I've had my clients tell me the straight out lies that they've been hearing about it. And no offense, they get to lie. It's a free country. But that particular thing was unusual. I think we'll see it again, where the stimulus payments are just taken into account on your tax return. So if you didn't receive them, for example, if you made too much money on your 2019 tax return, they said, you're not entitled to the stimulus payment either in March or in December. And then it turns out that your income actually dropped. And this is another, from 2019 to 2020, now all of a sudden you're eligible. It's the equity issues creep right in there real quick. This is where we go from so-called taxation, nice objective stuff, to politics. And I always have to sort of not rise up with my clients when they start getting a rise out of this stuff. But you throw those stimulus payments in because, and if you look at the nice thing about tax software, if you can do it, is you can basically model the result, right? You can plug some numbers in, take a look at do a preview. If you paid on TurboTax, you can preview the thing before you e-file. You can go back and make changes and say, wait a minute, I got that wrong. You can go back and make changes, make sure that the result flows through. If you plug in those stimulus payments or lack of it, then you'll see the results on the tax return. Those will be either included or excluded from a refund or a reduction in your balance due. So lots of interesting stuff. The other thing that especially if you're doing this yourself for the first time, you want to be aware of something called refundable versus non-refundable. Go ahead and read up on that. That's because there are some credits that you're going to get whether you have a tax bill or not. There are other credits that just reduce the tax bill that don't wind up in generating any cash. And there's some that are a mix. It's just a beautiful world, man. We are really good at making this really super complicated.
Are there any quick reference websites that could be useful for questions that they have later?
Yeah, I haven't looked at basically the home version of this. I'll get you a link. Let me circulate a link. There's a handy, really super handy guide that might actually have basically a home manual version of it. The IRS website, unfortunately, is a starting point because they work for the Treasury. Sometimes they're either by design or by default they're not able to provide enough information or don't provide enough information to really get a fair picture of it. And the other resources that are worthwhile are some of the law schools have got some nice online versions of this sort of information, which it'll start out with a topical discussion, a general discussion, and then lead you to the meat and potatoes if you need it. I forget which law school I've looked at lately, East Coast course, but that's where a Google start. But I can't remember that. I'm sorry. There's a reference book. There's a reference book that is published that has a subscription basis, but it's maybe Patrick knows. But there's also a homeowner version, basically, of it. A good place to get general information is the IRS publications, and they're not complete and sometimes glaringly so. But that's a good place to get started getting an understanding of your situation if you need it.
Just to jump in real quick, there is also an organization here in Chicago that's called Lawyers for the Creative Arts.
Okay.
And so that might be useful as well for people who have, something specific, since the arts as an industry and as businesses tend to run a little bit different than, say a retail business usually or other things. And so that could be useful. I've heard a lot of people talking up YouTube for just general instruction and how-to videos. I would not be surprised if there were some accountants and tax professionals who have accounts and channels on YouTube that you can find things. Ooh, and there's been a suggestion in the chat, benhenrymoreland.com.
Like in evaluating anything, any Google results. For me, as soon as they start dropping into something that they're trying to sell you, then it's like that was just a teaser, right? So there are some serious folks out there in Google results that basically I think the best part of that process is learning to refine your question, right? Through that whole process of going through the first results. There's good stuff out there. But usually it's a .org type organization, I think, that you'll rely on. But that Ben, what was the name on that? Ben somebody?
Ben Henry Moreland.
Yeah, if he's been doing a blog for a while, that sounds good. Just be practical. If somebody's 1099ing you and it's a significant amount, in IRS world, it's like $5,000 or something. What you'll get is it'll generate a IRS letter. That's the IRS standard, which is to give you the worst case scenario and tell you the money. And if it's less than that, if you're not getting 1099s, now it's sort of a voluntary tax system. It really is a voluntary tax system. It's kind of up to you, and you have to think, I think maybe in terms of benefit, if you are reporting more income than if you had just left it off the book. So since it is a voluntary tax system, people, it's their responsibility to decide that themselves. It's always offset with the maybe a small amount of conscience that you're not paying in, maybe more worried about the consequences of unreported income in the event that you are wanting to borrow a car or something to that effect, or buy a house, or even get a credit card. It depends on how long you want to stay outside the system, but you can report any amount of income and expenses, and if you wind up with a negative income, it'll actually benefit you. If you had anything withheld on the unemployment. So for example, if you aspired to do some business and it turned out when you do the math, you actually have a loss that's going to reduce all your income, which means the unemployment got over withheld, which generates a refund. So there's that. You really have to noodle around with it and see if you don't feel like it's going to benefit, but be sure to take into account all the whole picture, right? So take into account the unemployment income, if you have a part-time job somewhere, see how this all fits in, because it is legitimate if you're attempting to earn an income by whatever activity you're in. You really just do some rough math, right? You'll have an idea how much you took in, whether you deposited or not. You can still declare it, and you have some idea what equipment's expenses are, and whether you're traveling or something for that activity. Just do the rough math and see if that benefits you. And it's not if you're going to have you really should do a tax return anyway if you've got just unemployment, especially if you had anything withheld. But if you didn't have anything withheld and you still don't file a tax return,
I did.
You'll know, and IRS eventually about why is this not declared. So while you're at it, plug those numbers in to whatever software you're using, and then jump back out and say, what happens if I have this result from my business activity? Whether it's small or not, just see what it generates, right? Because you might actually wind up with more of a refund if you actually declare that stuff.
Okay.
That's a really good point, Thomas, that you can kind of, especially with these online filing forms, that you can do for free, that you can kind of go back and forth and make adjustments. And a lot of them, if I understand correctly, some of them will let you save it and you can come back another day, correct?
Yeah.
And so that gives you a chance to see what that looks like. This has been really great. Thank you, Thomas.
You're welcome.
I think just knowing that there's somebody out there that, like you said, so many people, and myself definitely included, have had this, fear that's been, whether it's fed to me socially or whatnot, of like the IRS, of doing taxes. This is a big, horrible thing. So even knowing that we can have somebody here to ask questions has been really wonderful. Melissa?
Yeah,
Yeah.
I'm so grateful. What a great conversation. I love getting really in the trenches on some of these very specific topics. And thanks everyone for contributing your questions and thoughts.